Well, copper prices have been making a move higher. They're up more than 14% in the past month. Our next guest believes the potential on imposition of U.S. tariffs continues to drive strong demand. However, he is watching demand and supply dynamics. Sam Crittenden is a mining analyst at RBC Capital Markets, and he joins us now. Sam, what's been the driving factor for copper prices in the past month?
So the big story for copper, like in a lot of sectors, is around headlines around tariffs, but specifically the threat of tariffs on copper into the United States. And so, like what we've seen with aluminum and steel, those tariffs are already in place. The U.S. government is exploring the potential to put tariffs on copper going into the United States. And so that's caused a rush to bring metal in before those tariffs might get implemented. And so that's caused this, I would call it a distortion or a short-term dislocation, where a lot of metal is being brought from other locations into the U.S. ahead of that, currently pricing in about a 13% tariff, so kind of halfway between no tariff and a 25% tariff. So that's really kind of where it's sitting. And it remains to be seen. You know, it doesn't seem like this is a real pickup in demand. But of course, this is bringing copper prices significantly higher, as you mentioned.
And so I guess at the end of the day, what would be your advice for people who are hearing the different back and forth on tariffs and what that could mean and how copper fits into the equation? What's the most important thing to be listening for?
Right. So obviously next week is important, April 2nd. We're all watching for that to see what is actually brought in. And that's determining where the path for global growth is, right? And that's what we're all trying to solve for. I heard it from your prior guest and probably most guests. It's, you know, what is the economic outlook, you know, happen in the second half of this year. And so, you know, our base case is that things start to improve and that does pick up on copper demand, and that would be constructive for copper prices, all else equal, barring, you know, a more dramatic impact from some of these trade wars.
Okay. Now, in terms of stocks, because obviously the conversation in the case of gold has prompted a lot of questions around how investors want to position themselves in the metal or in the equities. What about in copper? What do you have to think about when you're investing in stocks that are tied to the copper market?
Yeah, so it's an interesting dynamic right now because the stocks traded at a premium in 2024 to the metal for most of the year, but that's largely been eroded here the last few months, and they're now trading at a 10% discount to the copper price, which I think reflects investors just being cautious about global growth as a result of potential trade wars and not necessarily reflecting these higher copper prices. However, I mean, we still think the medium-term fundamentals are good for copper, so I think it is worthwhile having exposure. And I think if we did get some clarity on tariffs and if we move past this without a huge impact on global growth, I think the outlook is quite constructive and the valuations are suddenly quite attractive relative to the metal.
Okay. Against that backdrop, can you give us some examples of copper stocks that you think are worthy of discussion?
Yeah, two names I'd like to flag. Capstone Copper. They're growing production in their Chilean operations, so that gives them really strong growth this year and into 2026. That should drive a free cash flow inflection as they come through a period of higher capital spending. And so we like the outlook for Capstone Copper this year. And then secondly, I'll flag Hudbay. They also have exposure to copper, but also gold. And so about 30% of their revenue comes from gold. And obviously with the record gold prices we're seeing, that's driving strong free cash flow for them. But importantly for Hudbay, they've been developing the copper world and also before that, the Rosemont project in Arizona for several years. They've been working through the permitting process there, but it does feel like they're reaching the end of that to a point where they can start to build that project and start to create some value. And I think the climate in the US is definitely supportive of building new copper mines at the moment, and I think that can help drive Hudbay shares this year.
Sam, just a final question. I know there's so much focus on the U.S. right now, but as an example with gold, people have talked constantly about the appetite out of China in recent years. When it comes to copper, what should we be thinking about with the Chinese market or the Chinese appetite?
Yeah, I mean, it's still the biggest driver. They consume just over 50% of the world's copper. We saw a big stimulus announcement back in September, and that has driven some better economic performance, and so that's helping demand. They're also still subsidizing for this year autos, appliances, copper-intensive sectors, so that's helpful. They're investing in the electrical grid. So all else equal, the fundamentals are good. The risk, of course, is that a trade war drags both the Chinese and other economies lower. And so that's what's holding us back from being, more bullish than what we might otherwise be.
Okay. Sam, appreciate the breakdown.